Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. In today's video, we'll start by breaking down yesterday's price action and take a close look at how the expiry played out, the moves that mattered, the zones where traders got trapped, and the data that gave early hints of strength and weakness. Once we decode that, we'll connect it with the current price structure, understand what the market is trying to signal, and then build a clear and actionable trade plan for tomorrow's session, including the key levels I'll be watching, how I plan to react around them, and what scenarios could unfold based on the setup. So stay with me till the end to get a complete view before you plan your trades. If you find this analysis useful, make sure you like the video, subscribe to the channel if you haven't already, and share it with your trading friends. Now let's get started and decode the market step by step. For yesterday, what we had planned was that we'll be looking at shorting the markets below this particular swing. And this is the markets opened flattish, went immediately, gave us a closing below this particular swing, gave us the pullback that we wanted. This is where I entered the first trade for me, a short side trade with the stop loss just above this swing, which got triggered in the next 15 minutes. I took a stop loss of around 12 odd points in this particular short trade. Now, I had traded in the next week's expiry, like I always tell you guys, and uh, maybe the stop loss would have been bigger in case if we were trading in the current week's expiry. But then, like I also told you, that this will be a low probable trade, right? Because uh, this is just a very recent swing, and that is the reason why I traded with lower quantities. Immediately after triggering my stop losses, the trade market again went in the direction of the short trade. This is where I again re-entered into the trade with a fresh stop loss of just above this particular swing. Markets went down, came up very, very close to triggering my stop loss, came down, created a lower high, went up. I had trailed my stop loss from this swing to this swing, hardly made a difference of 3, 4 points on the options chart. But then again, this is the setup that or system that I use, and I move my stop loss from this swing to this swing. A lower A higher low was formed, followed by a higher high around here, where also triggering my second stop loss for the day, and then market went in my favor. I have a simple system or setup of taking two stop losses in a day and then I shut my trading system. No further trades for that day because that is only going to mess with the psychology. And what you'll only be doing is trying to find out trades so that you can uh, make your day end at break even, if not in green. And that was the reason why this is the place where I closed my system once this stop loss got triggered. Two stop losses in a day, and I am out of the system. Again, if you look at the markets based on the analysis, below this particular swing, markets went down by a lot, right? But then again, because of the volatility, we got trapped. We got trapped twice, and that is okay. This is something which will be happening in the market. Somebody had commented the other day on the video asking about how do you stay positive in times like this when the market is going on directionless and then there are no good trades that you find. And even if you're finding some trades, you are getting stopped out. You are a victim of the uh, volatility, and despite of all these things, how do you stay positive, right? So see, the thing is, these are phases and these will come no matter what you do. These things are bound to happen, and all you need to do is stay calm and positive during these times so that when the markets are right, you get to explore the better opportunities and make the most out of them, right? We could have avoided these trades as well, but then again, since we already knew that, okay, this is a low probable trade, so better to reduce the quantities, right? And that is what I did but on in this particular trade. And honestly, these are things which will happen, right? Even the best of traders go down through a drawdown phase, and that is what is happening around here. Now, before we move on to the further price action around here, again, after breaking this particular swing low, markets again went into a sideways zone, consolidated for a while, again gave a breakdown, right? But throughout, like whenever this was happening, if you look at the RSI on the price action, it was completely showing us a kind of divergence, right? So I also received a message from Abhay. So Abhay, this is to answer to your query. So what you had mentioned was from around 11:30, you compared this swing, markets made a new low, whereas RSI made a higher low, and you are planning to create or take a long trade around here, and that was the reason did not go into any short trades, and then markets actually moved down. So see, the thing is, RSI is a tool, is just a confirmation tool, right? So RSI showing you a positive divergence does not mean that the market is going to reverse from here, right? So the first and foremost attention that we need to give is to the price action, right? And if you observe from this particular swing low that formed, this was a clear sideways price action around here, right? Completely. No higher highs, no higher lows, nothing of that sort was forming. If you look at the broader swings, of course, it was simply a higher high, sorry, lower high, lower low formation only. So we need to give first preference to the particular price action, right? And RSI is secondary. RSI could have been used. So in case you would have been in a short trade, this could have been your signal to exit the short trade because of the divergence. But then it does not mean that we are going to go long from here, or we're only going to look at the long opportunities, right? There is also a concept of RSI cool off. So this is what happened around here is RSI cool off and not a RSI divergence. Now, what I mean by that is in RSI cool off, markets while goes in a sideways zone, and RSI goes and creates those upper lower highs, sorry, and higher lows, which gives you an impression of that RSI is giving you a divergence. But then in the actual situation of the things, RSI is simply creating higher going up while the market is going sideways, so that it can further go down, right? Markets, if RSI is going on making lower lows with the markets, then the scope of the markets further or price further going down reduces. So this is a bit of a complex phenomenon. So I would not advise you guys to look at it. But then this is what it is. Now you have to try to understand the major swing of markets around here was this and this. And all this price action consolidation was happening in between these swings, right? So this was not a structure change. For a possible market reversal, what we needed was this particular high to be taken out and this particular low to have been protected, right? If the markets would not have breached this particular low and then we would have broken out above this high, swing high, that would have been the cue to go long for compared also in accordance with the RSI positive divergence. But then out here, try to understand this is just a sideways price action of the market, and RSI, this is a clear RSI cool off and not a divergence. I'll maybe make a detailed video of RSI cool off as a concept, but then again, try to keep things simple. Don't get into too complex of a things. First, priority has always to be given to the price action, and that is what it was, a complete bearish price action. If we look at on a daily time frame, so the double top, that the breakdown that we got out here with the pullback, it has succeeded, right? And we might even be looking at lower levels. So that is something that we'll be planning for tomorrow. Today was a good break. One second. Yeah, we don't even need this particular line now. Nope, no, no. We're starting with a fresh slate, right? We don't need this high as well. We are already out of the sideways zone, right? So this was the sideways zone in which the market was trapped. We are already out of it. For tomorrow, scenario number one will be the trap scenario. Market opens flat, gives us a negative closing or a negative candle, and then that high of that candle gets taken out. We can look for a trade on the long side. Below this, we are short, right? Out here, if we look or find some positive price action in this particular zone, which is there, we will be looking at a trade on the long side. But then again, that will be a low probable trade for me for right now. If we look at the price on a higher time frame. This is the swing, last major swing, last major swing low. In case if both these swings are protected, only in that case will this level hold. In case of any of those changing, we will might need to revisit our levels. So if market opens with a gap up and we move around this zone, this is where we can look for a short entry, and only above this zone, we are looking for a long entry. We'll keep the plan of action very, very simple. Now, because of the movement that market has given us, right, on a daily time frame, the good move that we have got on the upside, the rally that we had gotten on the upside. So that also means that we'll be finding many support levels while we are moving down, which this particular swing high, the break of this particular swing high, now this was a resistance now turned into a support, and this is also a daily time frame fib support, so we might be finding some supports around here, and that is the reason why we will be again be trading with reduced quantities, and this will be the simple scenario for me. In between this zone, I will not be taking any trade apart from the short trade around here or the long scalp around here in case if the trap scenario appears. Apart from that, I'll not be looking at anything else, and we'll be keeping the trading extremely simple. And that's a wrap for today's analysis traders. We looked back at how the expiry shaped market sentiment, broke down yesterday's price action, mapped the zones that could drive tomorrow's moves. Remember, it's not about predicting, it's about preparing. So go into the next session with a clear plan and disciplined execution. If you found value in this breakdown, don't forget to like the video, subscribe to the channel, and share it with your trading buddies who follow Nifty just like you do. This is your Nifty Guy signing off. See you in tomorrow's trade plan video. Stay sharp and trade safe. Cheers and thanks for tuning in, guys.